Hi, I'm Jeff Panik with Balanced Wealth Partners, and welcome to today's discussion on one of the most important institutions every investor needs to understand, the Federal Reserve. I'm here to explain who the Fed is, why it matters to your investment portfolio, and how its decisions can make or break your financial future. Think of the Federal Reserve as the conductor of the world's largest economic orchestra. Every decision they make sends ripples through the stock markets, bond prices, mortgage rates, and your investment returns. By the end of this video, you'll understand the Federal Reserve and its foothold on the economy. The history, why the Fed exists. To understand the Fed's importance today, we need to go back to 1907. Picture this: no central bank, no financial safety net, and when panic, no pun intended, struck Wall Street, private bankers like JP Morgan had to step in to save the entire banking system. This wasn't sustainable. Before 1913, the United States suffered through devastating banking panics in 1873, 1884, 1890, 1893, and 1907. When banks failed, people lost their life savings overnight. The economy would plunge into chaos, and there was no institution capable of providing stability. Congress finally said enough and created the Federal Reserve on December 23rd of 1913 under President Woodrow Wilson. The Fed was designed to provide the nation with a safer, more flexible, and stable monetary and financial system. For the first time, America had a lender of last resort. How the Fed works. The Federal Reserve isn't just one building in Washington, it's a sophisticated network. Here's how it works. One, at the top, you have the Board of Governors, seven members appointed by the President and confirmed by the Senate. These are the Fed's key decision makers, currently led by Chairman Jerome Powell. Two, then there are 12 regional Federal Reserve banks spread across the country. From Boston to San Francisco, this decentralized structure ensures the Fed officials understand economic conditions from Wall Street to Main Street. The most important group for investors is the Federal Open Market Committee, or FOMC. This 12-member committee meets 8 times per year to set interest rates and monetary policy. When you hear the Fed raise rates or Fed cut rates, these are FOMC decisions. The Fed operates under what's called a dual mandate: maximum employment and stable prices. They target 2% inflation over the long term while trying to keep unemployment low. This balancing act directly impacts every investment decision you make. Why investors must care. Here's where it gets critical for your portfolio. The Fed's decision moves markets like nothing else. When you raise interest rates, borrowing becomes more expensive. Companies face higher costs, consumers spend less, and stock prices typically fall. When they cut rates, money becomes cheaper, economic activity increases, and risky assets often rally. Recent research shows that markets are 3 times more volatile during Fed Chairman Powell's press conferences compared to his predecessors. A single word, change, in Fed communication can trigger billions of dollars in trading. Think about 2022. As the Fed aggressively raised rates to fight inflation, the S&P 500 fell over 19%. Conversely, when the Fed cut rates near zero during the 2020 pandemic, markets roared back to life. Understanding Fed policy isn't just helpful, it's essential for protecting and managing wealth. Following the Fed today. So, how do you stay ahead of Fed moves? First, mark your calendar. FOMC meetings occur 8 times per year, roughly every 6 weeks. The Fed releases a policy statement at 2 p.m. Eastern, followed by Chairman Powell's press conference at 2:30. Pay attention to the Fed's dot plot, their projection of where interest rates are heading. Watch employment data, inflation reports, and Fed official speeches between meetings. The Fed has embraced transparency, so the clues are there if you know what or where to look. The key is understanding that Fed policy works with long lags. Rate changes today may not fully impact the economy for 12 to 18 months. Smart investors position their portfolios not just for what the Fed is doing now, but for where they're heading. The Federal Reserve transformed from a crisis response in 1913 to the most powerful economic institution in the world. Some argue too powerful. For investors, understanding the Fed isn't optional, it's fundamental. Whether you're managing retirement portfolios, growth investments, or defensive strategies, Fed policy will influence your results. Stay informed, stay prepared, and never underestimate the power of the Federal Reserve policy on your investment outcomes. If you would like more videos like this, go to my website, www.jeffpanik.com, or check out my upcoming book, Your Future is Now, Your Blueprint to Solving Your Retirement Puzzle. Have a great day.